People got to get out of the head about being right. Oh, I told you it was going down. That doesn't mean I could have told you it was going up, be wrong, and made money. You were right and either lost money or didn't make money. So what are we talking about here? I don't care where price is going. I care when price is going.
We are back, folks. Let's talk futures. My favorite guest of all time, Anthony Drager, Edge Trading Group. Anthony, how are you?
Good, Jim. How about yourself?
Pretty good. Looking forward to the holidays. It seems like volume's kind of like slowed down a little bit.
You know what's interesting is it was very low a few days last week. It was low this morning coming in. And then we actually get in the last 45 minutes in the SP, and you could see it. You got to manage your expectations so you're not forcing. But you also know that if you get a move and you're not on it, don't try to force it because you missed it. Like if you didn't get short in this move down the last 30 minutes, you're probably mad, angry. The only way you should kind of be upset by missing a move is if your strategy had you taking it and for some reason, fear or something else talked you out of it. Then you maybe should be upset with yourself. But if you weren't supposed to catch this move, like you weren't bearish looking for a downside breakout, you have nothing to be mad about. And then the next thing is you force the next trade. So you missed a good move. And you take the bad side of it, trying to force something out of nothing.
I've been doing this for decades. When I say there's always going to be another move in a market tomorrow or the next day or the day after, there always is. You're not missing anything.
One thing that I think will help viewers, I think about why price does what it does, and that's what we're predicting, right? We're trying to predict where price is going to go next, but it made me think what we're really trying to predict even before that, Jim, is where are the buyers and sellers going to show up? Because if you had a little bird on your shoulder and a little bird said, hey, there's going to be a 2,000 lot buy market order that comes in 3 seconds, you know it's going to spike the S&P 3 or 4 points, right? And you wouldn't have to learn anything else because you were just told where the next future buying is going to come in, and it's a big one, right? And so people got to think, like, know exactly what the heck you're trying to predict, and most people don't, and they get confused with all the inputs that goes into price going up or price going down. Put yourself in a position to time your location. A lot of people don't get to that, and they never actually get themselves on the right path to give them their best chance at that. It takes more buyers than sellers for the price of anything to go up. So you've got to start thinking, where am I going to get tools that help create probabilities that predict when the buying is going to come in? The example is a 2,000 lot buy order. All right, so we're not going to have that little bird that says, hey, 2,000 buyers are coming in. But if you put yourself in a position to kind of follow the herd from a helicopter, and the herd are the longs and shorts, right? And when you see that herd get to an edge of a cliff, that's when the market might be getting too short. What does that mean? Well, too many shorts, too many buyers that have to come in. Now you start to predict that your obligation is to put yourself in a position to say, does this tool give me the opportunity to predict more buyers than sellers? And all of a sudden you're like, yes, it does. Now it's a tool worth chasing. You know what's a good exercise if we go into slower markets the last few weeks of the year for people to do is when we talk about step one of a trading strategy. When you put your opinion out there, it's stressful to be wrong, right? And so strip that out. And this is just on sim. I wouldn't do this with live money. Strip out the first stage or the first step in any strategy, and that is bullish or bearish, up or down. Play it from one side. You're going to play it from the long side for the entire session. Your job is to fight for locations that will not only get you long in a good spot, it rallies, you take profit, but also take losers. When you take that first step in anybody's strategy, is it going up or is it going down? If you take that out of the equation, now you don't have to worry about being wrong and all the negative baggage that comes with that. Failing to admit you're wrong keeps people in trades longer than it should.
Yeah.
And all of a sudden, they've got the biggest loser that they've had all week. Or one trade takes away 10 winners. It's hard to admit you're wrong, period. As an exercise, take that part out of it. Just play from the long side all session long, obviously on sim, and work your butt off at finding good locations. And what's the definition of a good location? Having a trade go your way as soon as possible. Not necessarily to a full target or anything else, but taking a minimal amount of heat and having it start going your direction ASAP. So now you're playing on the right side of the trade. But going into next year, I'm telling you, if people aren't able to admit that, yes, it is hard to admit that I'm wrong. If you're not able to admit that, then I think you're going up against human nature. People got to get out of the head about being right. Oh, I told you it was going down. That doesn't mean I could have told you it was going up, be wrong, and made money. You were right and either lost money or didn't make money. So what are we talking about here? I don't care where price is going. I care when price is going. For a way to just strip out the emotion that everybody has, strip that out with an exercise, just fight for your location and be okay with being wrong. Because if your career is going to be made up of tens of thousands of trades, why would anyone be that important? It shouldn't.
Yeah.
They're stupid trades. I always tell people, don't cheerlead for your trades. That was something we didn't stand for in a prop firm. Nobody would be like, yes, all right. That no, move on to the next trade. You shouldn't be cheerleading an idea because it's a stupid trade. All right. What matters to me is, do I have the skills to stack probabilities and fight for a good location? Because when is more important than where when we're talking about price.
Go back to my commodity brokerage days where I was talking to traders 10 hours a day about their trades. I'd get this call every day. I'll put my mouse here at 6088. Hey, Jim, this is a big break. It can't go any lower. I'm going to get long. 10 minutes later. Hey, Jim, this is a big break. It can't go any lower. I'm going to go long. And then again, Jim, it can't go any lower. I want to go long. That mindset is probably wiped out more value than anything I've ever seen.
Adding to loser, essentially, right?
Yeah, or creating a loser.
But I finally figured out what really helps people stop adding to a loser. You know what it is?
Mm-mm.
They have to have a guy stand behind them with a baseball bat, bash them over the head every time they do it. That's the only way they're going to stop it. Or you have to trick your mind as if that's going to happen. That's how awful that habit is.
It's the trader saying the market is incorrect. I'm right. The market's wrong. The market's never wrong. There's no such thing as a correction, right? I hate when people use the word correction. No, price went down.
It's never wrong, but it is cheap or expensive, or else it wouldn't move. It gets overbought, oversold. Too many people are long. Too many people get short. They get stuck in the hold down at 66. All those buyers got to come in and they have to chase it up. Once enough of them chase it up, cover the short, and then all of a sudden we reach the top of that retracement, and then you got to work it back out to find a new imbalance. Markets don't move unless they go from balance to imbalance. Markets are never wrong at this particular moment, but they do get cheap and they do get expensive and get overdone. And our job as traders are to find those areas that there's opportunity that the price is going to reprice in 5 minutes, in 10 minutes. Right?
It's great that you said this. So NinjaTrader's launching, and we have it in Sim already as a beta, a thing called Pulse. And what Pulse does is it goes in and it says, all right, here is the net positions in the E-mini S&P. It's 33% more long than short. Or NASDAQ is 17% more short than long. Kind of looking at real-time positions, not actually order flow, but real-time positions that are open. And it's aggregated it, so everyone's data is hidden and all that stuff. It's just all added together. And it gives you this dashboard. We're going to launch that live with live data coming up. Right now it's in sim mode.
And their real positions are sim positions.
Right now it's sim positions, but I don't know when the launch date is. It'll be live positions.
And so now people need to understand how that's going to create the value of trading around that. You're on the right path of being able to find the moments that people get too long and too short. That's good stuff. When are they rolling this out? Next year?
I've been beta testing it. I've got a peek behind the curtain. It'll be sooner than later. Anthony, I greatly appreciate you taking time out of your busy schedule to be with us on NinjaTrader Live. Looking forward to the next time we get to chat.
It's always good. My pleasure, Jim.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.